Right, so here we have a revenue growth report. What we're going to do here in this exercise is to compare the amount of course, occupancy, ADR, revenue, and RevPAR that has been recorded in the PMS. So we download this growth report here on a weekly comparison. And that means we're going to look at how many more rooms did we sell, so how did occupancy increase, how maybe ADR differed, and therefore how was the impact on the room revenue and RevPAR of this hotel as well. So when we download this from the PMS, we need to, of course, set the dates. So here we're comparing two different dates in December, at the end of December, and then the beginning of January. And then we record, obviously, the dates that we want to see in the report, which is what we have here. So we want to see from the 1st of February until the 8th of February. So let's say the first week of February the following year, because we're still in December 2018. We're just looking into the future. And then we retrieve the same report again for the same dates. I just didn't copy them here twice in this area because otherwise the report is a little bit large and it's not easy to see, but we're still always talking about the same dates. So we need to read row by row. In January. So how did we grow from the end of December to the beginning of January? And also, of course, very important that we include the group blocks because we want to see the full picture of the property. We do not want to do a comparison at this time between tentative bookings and confirmed bookings. We want to see if everything goes well at the moment, what will be the best outcome so far. So how has also particular action we have taken maybe on the forecast laid out and what's the outcome so far. So we have here rooms available for the property. We see that not always all rooms are available, and some dates here we have less rooms available for out of order reasons. And it's the same in the second time we're retrieving the report. So this is the first set of data, the second set of data that we're now going to complete the gaps, and then we're going to do here the growth comparison at the end. So first things first, we can sum this up here directly because we need to know the total rooms available to do our total calculation that we always need to do on weighted average basis, totals with totals. So, sorry, 1 second. That's the one. So 10 rooms difference. Yeah, and that's what we're going to do here eventually in the totals. We're always going to do current because then we have moved from December to January, and that's our current scenario eventually, even though we see two pictures now at the same time, compared to recent, right? So rooms occupied, we have been given the occupancy percentage here and rooms occupied. So now we need to do the formula vice versa. Either we calculate rooms occupied based on the occupancy percentage, or we calculate the percentage based on the rooms occupied. So first things first, we're going to do this for now to find out how many rooms we have occupied. Then we can't drag it all down because otherwise we would be overwriting this value, this cell, and that obviously would not be very beneficial for us in order to find out this. So we do rooms occupied divided by rooms available to get the percentage of occupancy. Now we can do again this, drag it down, and then we can here again fill in this. Sorry, 80 divided by 200. And for the last one, again, rooms available multiplied with the occupancy percentage. Okay, that gives us our rooms occupied for this particular week in February. We sum them up as well, since we again need the totals for the weighted average of occupancy percentage, which is what we're going to do right now here as well. So again, it's totals with totals. If you want to do a weighted average, total rooms occupied divided by total rooms available. And then we can just quickly format it as a percentage with 2 decimals, or you incorporate the times 100 in the formula, either way. Good, so let's do this quickly here as well. So we have everything filled in at the same time, cohesively. Okay, then, sorry, here, we do this divided by this. I have formatted this already as a percentage, so I don't need to worry about that at the moment. Okay, and the last one, so I can explain this cell that is right now missing. So now you think, we don't have occupancy percentage, we don't have rooms occupied. However, we have been given the room revenue in the ADR, and we can of course now turn around the formula and say, okay, this is how much we have sold in total divided per unit price or price per room. Now we know how many rooms have been sold, so 100. So we can also sometimes use the other formulas or other KPIs to calculate our, to calculate our room sold or occupancy for that matter, right? So that's already done. So we can now sum this up here. Okay, and we're going to do the weighted average as well here, this divided by this. Now, one more thing as well to note, normally we can't have this standing in a report, 951.5, which is correct according to these values, but we need to round this, okay? We cannot sell half of a room or 0.3 or whatever of a room. That would mean people would share reservations that have nothing to do with each other. So we need to round it. Now, if you follow the rounding formula here in Excel, it will always round up because 0.5 means next decimal, full decimal. But as a revenue manager, supposedly we would always prefer to round a room down because that would mean we have one more room available that we can sell, hopefully at a better rate. Now, this 952 is fine for now. I would probably modify this physically in the system to always go to, in this case, 951, right? To go to the down decimal, not to the up. Okay, this needs to be percentage. And that's what we have done for now. We know rooms occupied and we know the occupancy percentage. Now we can focus on the room revenue and then the average rate or ADR and also then the RevPAR. So since we have now been doing here rooms occupied and ADR, we do multiply these two to find out the room revenue. I'm going to skip this one for now because here we have the RevPAR, so we need to go backwards. I'm just going to go quickly and complete the rest of these calculations here. Here we can now for once drag it down quickly. We can do the same here. So we have applied the same formula now for those gaps. Now, if revenue is given, I need to go the backwards way, kind of like we just did with the occupancy percentage on the second report. So I'm now going to do revenue divided by room sold to get the ADR. Yeah. So now we have here two more gaps. We have RevPAR and RevPAR on two different dates, but we don't have any room revenue, we don't have any ADR. If we know how the RevPAR formula works, we have two different ways to calculate it. We have the formula of revenue of rooms divided by rooms available. So I would do this room revenue, for example, this amount divided by this. So just to, let's say, do this here as an example for once. Or I could do the ADR multiplied with the occupancy percentage. Now, just occupancy percentage is now key here, the percentage sign, let's say, or the division with 100 for the formula itself. So that's what we're going to do now here to find out the ADR. We're going to take the RevPAR and we're going to divide it with the occupancy percentage. And here we have our ADR. And if I have the ADR, I can find out my room revenue, right? So same thing here again. RevPAR divided by occupancy percentage, since the formula would be ADR times occupancy percentage. So here now, of course, I need to divide. ADR is now here, so I can do ADR times sold to get the revenue. So I'm going to continue now here using the other formula. I'm going to do ADR times occupancy percentage. If we just want to do a quick check that this is correct, we can do rooms revenue divided by rooms available, and the results are the same. So we know that our RevPAR is correct. I would always, if you do it manually, recommend to double check by calculating both formulas in order to make sure that the result is the same in the system. Of course, it shouldn't really give you any issue because the system automatically has this set up for percentage. So let's go. I always prefer revenue divided by rooms available. I don't know why, just somehow is better for me. Let's do one more with ADR and occupancy percentage just to switch things up. And then that's it. So totals here. As well, we need the sum of all revenues. So revenue, since it's money, we can touch it. We can always sum it up. Let me just format all of this in the same way. The rooms sold, of course, can always be summed up, and the rooms available. So let's just, for the sake of simplicity, highlight the same. We can just sum up in using a normal sum formula in Excel. Things that need weighted average, I'm going to put in yellow. So we kind of always get reminded that these things cannot be just used by a general average formula, yet a simple sum is also not possible. So for the average ADR, what I need to do is I need to take the total revenue of these 8 days divided by the total rooms sold. And for the average RevPAR, I can do rooms revenue divided by rooms available, or as another example, if the ADR is correct, of course, multiply with the occupancy percentage, and tada, both results are the same. So I know these are correct results in this case. Okay. Because unified. There you go. So happy with this. Moving on now here, we still need to do the same thing one more time here for revenue, average rate, and RevPAR to complete the report. So again, ADR times room sold, right? Here we have this one given. So let's turn this around. Revenue divided by room sold. And now we need to go again backwards with the RevPAR. So RevPAR divided by occupancy percentage. And I can drag this down. And I can do now the revenue ADR times room sold, and I can drag this down. Here's already both given. I don't have to do anything. Oops, sorry, I need to be here. And again, RevPAR divided by occupancy percentage and ADR times room sold. Right? So we sum this up. And I need to do revenue divided by room sold. So again, this can be a sum, can be in green, green, and these two can be in yellow. Okay, now RevPAR, again, we can do this divided by this. Oh, comes out in red. And let's do this as well, or we can do again ADR times occupancy percentage to use the formula. Once more, room revenue divided total room revenue, of course, divided by total rooms available, or ADR total weighted average times the occupancy average as well. So also here the same thing comes out correctly. Good. So now we have the occupancy reports for both dates, both time periods, if you will, completed, and we can now focus on the completion of the revenue growth. So we had already done here the first one for 10. So we first calculate the difference of rooms occupied or rooms sold, and then the growth percentage of that. So these two are connected. Let's put them in the same color. Then we can do the difference in occupancy percentage. And since it's already a percentage, it's very simple, straightforward. We just compare the two percentages. We deduct the current one with the previous one. And then we do the same. We calculate the difference of room revenue, the percentage of growth, the ADR difference, the growth, and then the RevPAR difference and the growth of that, and then the totals. So here we go. First, we'll take the current room sold minus the room sold from the beginning. And then we can just drag this down here. And you can see here that we have, for example, lost rooms, right? So we could highlight this in red. And here again, we have the dots, so we would need to round this. There you go. So if we would do the sum of this, it would not necessarily total to 10. That's why we need to again go with totals. So the average rooms sold with the average rooms occupied, right? So do it if me to move this since we're now doing rooms occupied. Okay, so that was that. Now, how do we do the growth amount? We take the difference and we divide over the previous, which would be here 50. And we want it as a percentage with 2 decimals, right? So 10%. Of course, if I had 50 rooms in the beginning, I grew or I increased sales to 55, that's 10% in growth. And now we can just drag this down. And for the total growth, again, we're going to do growth difference over the previous as a percentage with 2 decimals. And again, of course, if I lose 4 rooms, I have a negative percentage of growth. The rest, of course, will be positive. So 100 rooms more that we are selling will equal to 11.68, percentage of growth in terms of sales, right? So occupancy percentage growth, very simple. We take the current one minus the previous one because it's already a percentage there. We don't need to do any different calculation. And just make this a bit bigger. And then we do the same with the total. So this minus this one. So this is quite interesting to see, because if I'm selling 100 more rooms, even considering I lost here 4, but overall over these 8 days, and that is almost 12% in growth of sales, that is only a growth of almost 6% of occupancy, right? Because different rooms were not available on those dates. It's not unified. That's why the growth percentage cannot be the same. So revenue growth, we again take our current revenue minus the previous week's revenue or the previous report's revenue date. And here again, we can just drag this down. And we can then do the same with the totals to do that. Okay, now we have here as well some negative numbers, because probably, and we will see this a little bit later, ADR has fluctuated, and on top of that, the level of sales. So it may not be enough what we have gained in occupancy in order to still gain good revenue, because the ADR may not have followed suit. So then there may have been some particular loss of revenue. So if you can see here, 19, for example, 70 rooms sold at 19,000 in revenue, and then 90 rooms sold at 10,000 in revenue. So obviously we have done something in ADR, and you can see that here, because the ADR has dropped almost over 160 euros, because we had it at 271 and then 217. But it would be very difficult or very tedious to compare it like this. So the growth amounts and these kind of differences help us a lot to do this faster. Now, overall, still we've gained almost 6,000. You may or may not argue that this is not enough. We're looking at February, remember, so we're not looking at December or January, so we're not looking over the Christmas, New Year's high season period. So this will maybe still be okay, because February might be mid-season or even low season. So let's do the growth amounts. We again do this divided by the previous. I want it as a percentage. Thank you. And we drag it down. Of course, if I have a negative revenue growth, meaning I've lost revenue, of course, the percentages need to be negative as well. And now I do again the same with the totals. And again, I like this as a percentage, please. There you go, 4%, 5.24%. So that's the growth amount in revenue. Now, ADR difference. Again, we take our current ADR minus the previous ADR. And here we can say, okay, show me as a currency. Can drag it down. And then, as I said, what we've just seen before, we are obviously deducting the ADR, we're reducing it for whatever the recent shifts in market. We see that pickup has slowed down, competitors have changed something in their strategy, etc. So we saw the need to change the ADR. It did not necessarily work out day by day. Overall, it still is in our favor at the moment, but the final call will be done once we've done the RevPAR. Right, so let me just highlight these as well, because these two are the same, of course. These two are the same. And these two, of course, belong together as well. So growth amounts, it would be this over the previous ADR. And of course, here you can see that the growth amounts need to be negative again as well. So the highest impact at this moment was in this particular week. So maybe that's something that eventually we should look at, why this in this particular date, which is here the 2nd of February, Saturday weekend. Again, we should check this a little bit further segmentation wise and so on, why we have dropped the rate significantly at the start of the weekend. So we need to do the total as well, which is this ADR minus this ADR. And of course, it has to be negative overall, because it has gone down. But still, it's €7.70 overall deduction of ADR, which still has resulted in almost 6K additional revenue. So far so good. Probably it was needed to drop the ADR, which still has then obviously significantly stimulated sales. So it may have been a good decision. Let's find out the final RevPAR results to see if RevPAR has overall increased. So then we can probably be happy with it. So RevPAR again, current minus previous. And we can drag this down. And of course, if revenue and ADR go down, probably there has been an impact on RevPAR. Let's see how great it was. Well, overall, we still have gained RevPAR, right? So we are not doing too badly here at this moment. Let's do the growth amounts to double check everything. Oops. Okay, so again, these ones are negative. I know you can do this with a conditional formatting. I'm just doing it quickly like this because we just have a few dates. Of course, if you have a longer table, you would need to do this faster using the conditional formatting. But for now, it's fine. So what I meant to see now was, did we still increase RevPAR generally speaking? So here we can do a quick recap week by week or day by day in this case in order to see how it's going. So increase of €3.68, minor, okay, fine, 10%. Decrease here, 80% drop. So like I said, we should definitely look into this a little bit because obviously it also has an impact on the Sunday, even though here it's not as dramatic, but these two are a little bit questionable. So look into this, please. Then we have another drop here, which is the Tuesday. Okay, during the week, I'm not sure how significant that may be. Again, could be location specific, type of property, etc. Also look into it, not as dramatic as these two, but fine. Then again, we have a little bit of growth, and then again, a good growth here. So overall, increase of RevPAR by €3. You may say now this is not much. Well, over 8 days, €3.30 more. Let's say that happens for the rest of the month. That's like a €12 something, €13 increase. Not bad, I would say. Again, depending on the season of February and what February signifies to us. That's obviously revenue can be still worked on. Now we need to think if we can still sell more rooms. So if we're now on Friday, the 11th of January, right? We said that this was our current date. Since we still have obviously about 3 weeks left in terms of forecasting, what can we do in these 3 weeks to still push things further? And if we should continue with the strategy of keeping the ADR at this level, in order to sell more, then of course occupancy would increase and therefore also increase and push up room revenue, which then has a smaller trickle down effect on RevPAR compared to increasing ADR, but it may not be possible for us at this particular moment. So to summarize this, please investigate those two dates here, February first weekend, Saturday, Sunday, because that is not necessarily such a good thing there, but it may just kick off for the following days and weekends. So maybe that's just a one-off and then we can isolate this event. If not, please look further into it, why this is always happening maybe on a Saturday night, for example.